Alright everyone, here we are with another video with Invest for tomorrow. To the first time viewers to investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for you guys to smash that like button, and if it's your first time here, do not forget to hit that subscribe button and click on that notification bell so you don't miss a single video and you're up to date on our chart analysis here with 42 Vision. So here we are with the SPY, and it's showing two dip areas back to back, and we just hit our third one here within 2.5 weeks, right? So we need to talk about how we went up to this point, and what's going on right here that no one is really talking about, but it's coming up next week. So we're going to break it all down, but before we do, I want to share with you guys the home run opportunities that were mentioned this morning over at the Discord. So the home runs of the day were spectacular and beyond expectations, and if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord, getting connected to our 42 Vision indicator, and becoming part of a growing community of investors, all looking to learn and grow together. So these are the two stocks I mentioned this morning. Both of them gave jumps of 3 to 5%. 5 to 10% plus, and one of them nearly reached home run territory, and that was TKLF. We caught this one in the pre-market under a bull indicator, full strength consolidation towards the bell, and full strength on 42 Vision after the bell, giving a highest point of 18% plus within minutes, guys. And apart from that, our other home run was from our SPY bot. It sent out a bear indicator at 10 a.m. And from that moment forward, put options went up 200% plus within hours at the highest point of possibility. If you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts with our 42 Vision indicators, check out the link down below in the description to the Discord. We look forward to having you join us, and let's jump into these charts. So here we are with the SPY pulled up, and I'm going to share with you guys what happened between these dates and why did we fall here, and what's happened from this date to this point and why we're falling right now within the volatility, right? So I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 Vision indicator, getting connected to the SPY bot, our QQQ bot, our newly released Tesla bot, and we have other bots on the way, so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. So here we are with the SPY going into the first bear indicator in the last 4 days of this week. And here we are on the 30-minute pulling back. So what happened on July 14th? Well, you see it popping up there. We had one of the Fed members pop up and state, hey, the markets are pricing in too aggressively, 100 basis points. I see 0.75, but he was open to higher rates if necessary. So things started to turn back around, right? Then the next date, as you see it popping up there, we had the consumer sentiment. It was actually better than expected, and actually now at a point where we have seen it kind of increment instead of going lower. Now, the next date was right here on the 18th, which was after the weekend. This was Thursday and a Friday, and this was Monday. And then we had Apple randomly come out with news that shocked the markets, and things quickly turned downwards. And then after that, Apple and everyone started stating, maybe that's not that as aggressive as we think. A lot of companies are doing that, cutting back on spending, okay, yada, yada, right? So then all the different dates here have been momentum of continuation of pricing in the good news from Thursday and Friday of last week. Well, we went through the whole week, and today, Friday, bear indicator, and we're falling. Well, it has to do with one single thing coming up next week. July 26th and the 27th, the Federal Open Market Committee meeting, guys. FOMC meeting coming up, and since June, they were actually gravitating towards another 0.75 hike. The Federal Reserve officials had indicated that, and now with the hot inflation, some are pricing in the possibility of a 100 basis point hike, but one of the Fed members came out and kind of cooled that off. That's why things quickly were falling, right? From the middle of July all the way till almost the second or third week of July, and then we jump back up now. Now we're going into the last week of July, the end of the month, and things are already getting priced in for the volatility that is to come and the possibility of obviously the Fed members being more aggressive than expected, or even that 0.75 that is pretty expected to be aggressive compared to the 0.5 as always. And like the Fed member Jerome Powell stated last month, that is the highest that we've seen in years, and that is not usual to do that unless necessary. So right now there's a lot of speculation, and then on top of that is one of the biggest earnings week that we could have in the month of July in this quarter is coming up next week. And then at the end of the week, we also have the release of the official, or well, not the official, but the first official estimate of GDP. And if it comes out negative, 2 quarters that are negative are considered to be officially in a recession. Now we need to see how things play out, but this next week is a very big week, guys. And then when you zoom out in the volatility, and this is why 42 vision allows us to see the dips from wide Fred borders to the rips and strength of bright green, and the bull and bear indicators in between as extra layers of confirmation every time. And within the transitions, things are still in a volatile state. I always state this, everything that I share in my videos is not financial advice, just my perspective and opinion alone. But I personally believe there's going to be a continuation of volatility. It's not going anywhere, and I'm going to continue to try to maximize within the volatility in either direction by receiving this clarity and edge with 42 vision. And many of the members in the community are using it as well to maximize within either direction. So here we have the 1 day. It's been under a bear indicator since April 13th. And this was our first bull indicator in months, right? And here was popping up at 385. Things bounced off that triple bottom of 372. We went higher, and we're rejecting at right around that 400, 399 mark and coming back down towards 394. Now, this bull indicator, if it gets canceled out by a bear indicator pretty quickly, it could turn out to be another story like this one right here, or like this one right here, where it quickly got canceled and things continued to pull a little bit lower or retest that same area, right? So this is our first bull indicator in a while. First big transition from white with red borders to dark green. Hasn't hit bright green. It could possibly go higher within the volatility, or it could cancel around this area. So something to watch very carefully. I'm going to be watching if by any chance this continues to go down in the more volatile time frames, the smaller time frames, and the 1 day pulls back into dark green with red borders and goes into a transition of red bars and eventually cancels out this bull indicator. It could signify that we may retest these lows. We'll have to see where the volatility takes us. We were also tracking the dollar as it was going lower. Now it's spiking back up, right? Trying to fight its way back up. And then also the same thing with oil and the 10-year treasury going down. This is something that's very important. If it tries to go ahead and go back towards 3%, that is going to be significant. But for some reason, it's not going closer to it. If not, it's going lower. But when you zoom in, you can see here that even though it's collapsed, it actually is not indirectly affecting the market. So either the markets are going to continue to go in its direction because of the anticipation of the earnings week that's coming up, as well as the FOMC meeting. And if this starts to go up fast, very sharp next week, that is going to be interesting, because right now they're not moving together. It's almost like the market is doing its own thing while the 10-year treasury is going lower. So super important. Now, in this zoomed in version here of the 30-minute and even the 15-minute, as you can see here, they're both under bear indicators. I'm going to be watching on Monday if these bear indicators are holding true and if the bulls are struggling to bring itself back up and cancel them out. Now, this first support here is 392. If that gets broken through, the next one is down here at 390, and below 390 would be all the way to 385. I'm going to be watching those levels very closely, and it would also mean that we're going below where things found support and continued the bounce upwards towards the 400 range. Very interesting how it got up here, rejected it, and now to the upside, I'm going to be watching 397. If that gets broken through 400 and above 400, it's going to be 402. Those are the tight areas where I'm watching to the upside or downside to see if the bulls or bears are trying to put up a fight to go ahead and dominate the chart. But right now, we are under a bear indicator, and the last time we got one, it actually lasted for about a day. Now, if it breaks through the support of 392 and 390, well, things are a little bit different. This one actually went ahead and recovered pretty fast here, as you see it with that bull indicator popping up in the pre-market. But next week, it's going to be pretty volatile. I'm going to continue to watch 42 vision, try to maximize within the moves in either direction. And right now, things are looking like they're going to retest these lows here. And the next week is filled with information to give the outlook to the overall market moving forward. Some people are even stating that this right here turned out to be a relief rally, giving a chance for those that have not gotten out of any positions to get out before the possible pullback or the even larger one, whether it comes in a few days, next week's. We've been talking about all the different articles and price targets that banks have on the S&P and the overall market. But again, not financial advice, just my perspective alone. And there's opportunities in either direction every single day from the way I look at things and how I approach them. Not financial advice. Again, my opinion. And as always, guys, thank you guys so much for watching. And let's make some money.